Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. This is the Long Hill Report. I'm Richard Morco here with Mike Carnevale. Mike is going to steer us straight on where the economy is going. All right, well, I played fast and loose with Mike because someone put something up and I made the mistake with, what does that mean, saying that? And they explained it to me, which is not that great because there's only so much I can soak up, so I brought it into Mike. It appears that this fellow at MTS Observer has come up with a chart to show that the dollar is just dying against gold. And you know, if you watch TV, every 5 minutes somebody is saying, you want to buy gold.
Yeah, yeah.
But he goes back to 1915, where the dollar, well, 1914, 1930, when the dollar that we know it today, Federal Reserve and everything, came into existence. And for years, gold and the dollar seemed to be hanging well together. And then in the 1960s, with Richard Nixon, took us off, well, sort of off the gold standard, and put us on the petrodollar standard or something. And ever since, the dollar has been losing value. What was Hemingway's thing? A disaster happened, first gradually, then suddenly. And is that what's going to happen with us, Mike? You got any thoughts on that? This is our... You've got to look smart for us. We don't do that, Mike. Oh, see, I say we.
Well, there's 2 pieces of paper here with stuff on it.
Thank you, Mike.
I don't know if I can say anything more than that.
You know, we're in a world now where it seems like every day we have a record breaking down.
Right.
So
right.
Can that be anything but inflation? You could put that in.
Yeah, not necessarily. I mean, it's obviously gold hasn't kept pace with inflation.
Gold hasn't.
No. And but
why do you say gold hasn't kept pace with inflation?
Well, it's really had a very limited return over a long period of time.
If the dollar itself is sinking,
yeah,
isn't that the appreciation of gold? Gold doesn't have it was kind of explained to me that gold doesn't change.
Right.
Other things change against it.
Right.
So
right.
That it doesn't have 10, 15, 20 every year or something.
Correct. Correct.
If the dollar's sinking,
right,
it does have an appreciation.
Yeah, but when you compare it to, like, well, as this chart compares it to the S&P 500, there's really no comparison, right?
In the sense that the S&P is going up.
Right, it's gone up much more.
But gold, that basically means the stocks are losing the value if they do it insanely like that.
Well, I mean,
It brings up another question. What is value?
right, right. And I think the value of it would be is how something is performed against inflation.
What is, gold is crushing 4,000 today.
Right, right.
It was $35. It was actually $25 an ounce when Roosevelt, I believe, when Roosevelt started fooling with it.
Right, but if you look at where the S&P was back then to where it is right now, it's, I don't know how many hundreds of times higher than.
So what is causing the increase in the Dow?
The difference between, well, it's company earnings, and that's the difference between what the company's earning versus, you could say versus inflation. So if they're earning more
Versus inflation.
and that they're able to compound that over decades, then that's how you get that chart to look like that.
So you think when we've talked before and we've spoken about the Dow, your thought is that the Dow is half inflation.
You're right.
Okay. I would say that we're going to, unless we get a handle on inflation, because it's really, look at the years. It's jacked up more these last few years.
Right.
And gold is now starting to move. The move hasn't really probably happened yet.
No.
So our next show, ladies and gentlemen, will be done in the Caribbean or something where we can escape with all the gold we've collected.
Yeah. I mean, the stock market has really been the only thing over a very long period of time that's beaten inflation. Now, a lot of people are going to say, oh, no, real estate in my house. But a lot of times, people don't factor in the additional money they've put into those investments to get to where they are.
Exactly.
Whereas,
it's sort of like a half Dow.
right,
With gold.
or less.
With inflation and the earnings and the. But
Right.
a house can't earn anything. I mean, real estate as an investment can.
Right.
But I think I live in heaven. I think I live in the best house. Maybe not the greatest house, but the Nowheresville town I live in is wonderful.
Right,
And that gate is perfect to me.
right.
But it as an index, it don't work.
Correct.
Okay.
And so that's why I would stick, with the stock market as being the one that has the best potential to outperform
Well, that's really all there is.
inflation.
For people is an index, something like an index.
Yeah.
Because what are you going to do? Go to work, come home, and then spend all the time saying, "Is this investment good? Is this
Right.
Should I buy Chinese porcelain?
Right.
What do you do?"
Right. And the index, the S&P 500, I think, has been said many times that it's not the S&P 500 index that it was 10 years ago or 15 years ago or 20 years ago. It's a much more high-tech, aggressive, higher risk index because it's
They say it's
dominated by so few companies.
It's only a few stocks.
Right.
It's,
Right.
you almost caught them on your own hand.
Essentially what happens to NVIDIA, Netflix, Amazon, the other 490 something don't matter. And that wasn't always the case.
We better hope this AI is the real thing.
There's a lot of things to worry about. And you're starting to see some of that creep up with, obviously the market making its highs, obviously the cryptocurrency all-time highs, gold, silver too, getting up there. It's something to keep an eye on because usually things can turn when you get to those areas. And the whole thing is going to be how this all ends. And you factor in the government, and how this all ends is going to be. We hope it all ends well. It usually does. I think it does, but you can also make a case that it doesn't all end well, and hopefully that's not the case, because no one wants to relive, 2008, 2009, and those.
I remember.
The housing financial crisis and stuff. No one wants to go back to that.
Well, you've not met everybody in the world, but you're right. Nobody really.
Right.
That I know of, anyway.
Yeah.
Okay. Well, let's get to the real world. Is this the fake world, or was that the real world?
It's probably a little of both, actually. But take a look at the scoreboard, and then you can determine whether it's real or not.
I just want to get down to the science
Yep.
here. All right. So September. Why do you think it's turned it around in the last few years?
No idea. I mean, historically, September is the worst month. But we're in a cycle now where no matter what the news is, it has had no effect on the market. So that could mean a couple of things, right? And you won't know until you know. In other words, you won't know until the end. But it could mean that the market is just discounting all of this and saying, okay, we got this set of factors, this set of government for at least the next 3.5 years, but this will pass, and so we're not going to get too excited about it, and the market continues to go on its way. Or it could be the other way, that it's gotten so far ahead of itself, as it did back, early mid-'80s, up into that October of '87, and then as it did also in the mid-2000s, prior to the financial services crisis there in '08 and '09. You don't know what it is. It's probably a combination of the two, but it's very obvious that any news coming out of Washington or the administration, which in the January, February, March area did have an effect on the market. You remember, it would have like a 1 or 2 day effect. Now it doesn't matter what comes out of Washington, it's had no effect on the stock market, which tells me the stock market's not paying any attention to what's going on in Washington, and they don't believe that anything that's going on there now is going to be long lasting. It's the only thing that makes sense when you see the Dow, having 6 all-time closing highs in September, and over 46,500.
Yeah, well, they keep having the highs. That's
Right.
Well, I mean, I could see it being steady growth, but all the highs seems to be a little confusing.
Yeah, the one thing you're not getting is that you did have in those past high cycles is the big swings daily. Remember, it used to be up 1,500 points one day, down 1,200 the next day. It's been more of a constant 400 or 500 point rise. So you're not getting the wild swings you did have. Okay. And a lot, I think, that was centered around what was, coming out of Washington. But you've got, the government shutdown. You got all these other things that are playing that you would think could have a negative effect, and it's like they're having no effect at all, which would tell me that the institutions either don't believe what's going on will have any long-lasting effect, or they're just ignoring it.
Ignoring seems more likely, as it's a new thing every day. Mm-hmm. I mean, the government shutdown, let's face it, that's a fraud. They're still taking money out of my paycheck.
Right.
They haven't stopped that. This is a complete fraud.
Right. Yeah. Yes.
Anyway,
But
yeah. but we don't. It's a new pronouncement every day.
Right. And I think as those more and more pronouncements come, they lose their shock value.
Yeah. Oh, that. Sure.
I can say 6 months ago, you would hear people say, "Oh, did you hear this? Did you hear that?" And now, those people they're not saying anything. It's like, oh, did they say that today? It's just like, yeah, not paying any attention to it. I think a lot of people are tuning it out.
Tuning what out? No, that was stupid.
Yeah, well, whatever's coming out of
I
wherever it's coming from.
Oh, yeah.
Yeah.
Yeah. Where do we stand today with tariffs? I mean, it's the new thing.
Or is it? We were going to beat up Canada. We were going to grab Greenland. We were going to, and we were going to solve Russia, Ukraine. And you don't hear about any of those things anymore. And I think people just have. I think the market has tuned it out. I think, and that's why you're seeing, I think, the stock market do as well as it has. Also, interest rates are coming down, and that's a positive for stocks.
And how are they? Just by the Fed's pressure. I mean, the administration's pressure on the Fed. Is that what's thinking?
I think the pro-administration people will say it's the administration's pressure on the Fed, but I think it's pressure from central banks around the world who have been cutting rates for 6 to 9 months, and we have not. I think that's the pressure.
We have to go along with it.
Yeah.
Okay.
I think that's the real pressure.
All right. We might as well get into the technicals, I guess.
Well, as great as the month of September was, there really wasn't any change in the technical indicators. They moved very little, which tells me October could, be a pretty good month. I don't think the market's going to, October we had the wild fluctuation, the crash of '87, that happened in October. Mm-hmm. And then the real bottom of the stock market back in 1973 and 74 when the Dow got down, I don't know, 600-700, that was the bottom. That occurred in October. So October can be a very wildly fluctuating month. May not be this year because the technical indicators really have not moved much in a month.
I'm looking at what you've put here. The 200-day and stock exchange moving average just didn't seem to move.
Didn't move at all. Volatility index didn't move at all. The oscillator, moved a little bit, 1 point, and that combined CNN, they call it the Fear and Greed Index, that moved down about 11 points. But combined, these indexes, these technical indexes did very little. So, from a technical point, nothing's really different from where it was a month ago.
So things go along as they've gone along.
Yeah, I think it's going to be more closing highs in October and no big downswings. Yeah.
Okay, so the big news is the Fed. A bit of news anyway. Fed got, that was pretty much expected. Yep. 25 base.
Mm-hmm. The jobs market we know has slowed down based on reports that have come out, and they mentioned that. And then if you look at the futures, Fed funds futures market, they're hinting at 2 more rate cuts this year, and then possibly another rate cut toward the beginning part of next year. So if that holds, interest rates will be down 0.75% by next spring. That's a big drop.
And so people start going out and buying houses.
Well, it'll make things a lot less expensive. Oil's stuck in the mid-60s, although today the president said gasoline was going to be under $2 a gallon very near future. That'd be good because I'm paying close to $3 now. So,
who isn't?
yeah.
Okay, so how many the drilling rigs have gone up?
Have gone up in a
So
month.
we're floating in oil.
Yep, production's near an all-time high. Well, it's the highest since it was in March. So, you know.
All right, let's get to the science now.
Well, a
Toronto.
month ago we said, you know, Toronto was leading the American League East. That would be a good thing if it ended that way,
Yeah.
and it did.
Okay.
And in the 6 times that they've won the division, the following year the stock market was up 5 of those 6 times, for an average gain of 11%. So if history repeats itself, sometime next year the Dow is going to be over 50,000.
Is that real? Is that real?
You know, I look at something like that.
I mean, I believe the science is real of the,
Oh.
of the Oreo. Of Toronto,
Yes.
of Toronto, but is $50,000 real? I mean, is it?
I remember when I just got out of college, and there was this guy, Harry Dent, who wrote a book, and he said Dow 3000, and people said the guy was nuts. Dow was Dow was around 900 or 1,000 at that time.
Well, I told you about the guy I worked with. You know, I told everyone he had a business of laundromats. He was a CPA, and I said, you know, we were talking about how is that a good business? And he spoke kind of appreciatively of it. So he said, I'm going to go back in it. And I think this was in the maybe early to mid 80s. You know, they're talking about a $3,000. Why would I want to do that?
Yeah.
I said, you know, it's a strange world.
Hey, I remember it was in 08, 09, the Dow got down to 6,000, and people were saying, oh, if it could only get back to 10,000, you know, I would cash out of everything, they were saying. It's 46,500 today, you know?
It's an interesting world.
You know, I mean, sort of like the Mexican peso, right? You need, I got 100,000 of these. Yeah, well, when you get another 10,000, you can buy a loaf of bread.
Well, you know, my great prediction is we lost the penny.
Mm-hmm.
How long before we throw away the nickel,
Yeah.
the dime,
Yeah.
the quarter, and we eventually stop printing the Benjamins?
Mm-hmm.
Wait a minute.
Yeah, yeah. It will happen if we live long enough.
That's why I live a healthy life.
Okay. You
Stop
want
the drugs. No more
Yeah.
booze. It's
Yeah.
over for me.
Yeah, yeah.
I want to see the
You
future.
want to see the future.
All right. And inflation, which slightly touched on.
Yep, kind of a mixed bag. A month ago, you saw that big increase in producer prices. A lot of that was tied to the tariff. The question was, would that cross over to consumer inflation the following month? And we saw that it did. That consumer prices in August had their biggest rise since January. And that can be traced to the biggest increase in over a year on producer prices the prior month. So producers are passing on these costs to consumers.
Well, why wouldn't they?
Right, and you knew it was going to happen, although a lot of people said it wouldn't. So it was sort of a mixed result. Leading economic indicators, they're down again. But there's really been no government reports in 2 weeks. So everybody's guessing, because of the shutdown, right? Everybody's guessing what these things look like. And most investment firms are saying that these numbers are getting worse. And that's going to put pressure on the Fed to keep cutting interest rates. And we won't know what these numbers are until the government shutdown's over. But it won't matter because these numbers will be 2 to 3 weeks old, and they'll, you know, be for the history books. Really, they'll have no meaning on
Do they really have meaning ever?
I think they show a trend. I mean, a lot of
well,
people.
yes, that's of course true.
I think a lot of people hang their hat, so to speak, on the number, whatever that is. It really is never the number. It's more like what the trend is. And prior to the shutdown, we saw these numbers getting weaker and weaker. And a lot of firms are saying that even though we've missed 2 reporting cycles, then those numbers would even be weaker now. So I think interest rates are going down, and interest rates have fallen pretty quickly, too, in the last month.
Okay. Well, let's talk about, now this is another way of actually looking at the economy. Now, if Biden had been reelected, if he had run and been reelected, and jobless claims were down, his supporters would have said, look at the wonderful stock market.
Right.
But now the stock market's up and it's the Trump era. The numbers don't look that good.
Right.
And so
The numbers are getting weaker and weaker.
Yeah, somebody has something to blame.
Yep.
And there is something to blame. Jobless claims,
Are smaller and smaller.
yeah.
A good sign. But that's only a good sign if the employment numbers are strong.
Yeah.
And they're not. They're even weaker than the jobless claims.
22,000.
Right. And that's the August one. The September report is being held captive by the government shutdown. So, but most firms say that number was even weaker in September. And so, yeah, jobless claims is only like part of the employment picture. It's how many people losing jobs, that's jobless claims. But how many people are getting jobs? And that number keeps getting smaller and smaller. So there is definitely a slowdown going on. And, the next big topic will be, did the Fed wait too long? Who knows? You won't know until, like anything, you won't know until, they do the autopsy, so to speak, right?
The autopsy. In the theater, in the opera, you know what it's called?
Go ahead.
Fat Lady Sing.
Yes, yeah, yes. You're right. Hopefully when they do that autopsy, nobody's eating Junior Mints.
Oh, God. Anyway, okay, so let's look at this now. The people, I mean, this is where most of humanity in this country lives, is on the employment report.
Yeah.
Where their neighbors are working, are they in danger of losing their job? So even if they've got some kind of 401k that they took with them or anything, they don't look at that every day.
Right.
They're just saying, 40 years from now, if I
Right.
live that long, I'll
Correct.
cash that in. And they better hope that's lush.
Yep.
But the jobless, the employment report is where the average walking around person lives.
Right, that's right.
So in the Trump administration, do you think that's going to continue the downward slide?
I mean, it hasn't been this weak, in years. There have been some times, during deeper recessions where you actually lose non-farm jobs. And, in August we were close to that, at gaining just 22,000. So, I mean, it's good, we've had a long, the 55 straight months of job creation. I mean, obviously things are really slowing down. They probably would have cut interest rates sooner had it not been, all this tariff talk. I think that scared some people into thinking, it's going to cause inflation. And we did see in the inflation numbers for August that it did cause inflation, right? It did show a bump up.
Well,
So
I mean, was that the cause? But it happened.
it happened, right? And so for the Fed waiting to cut interest rates, well, at least up to this point, yeah, they probably made the right decision in not cutting it, because it probably would have caused a bigger spike for the month. But we don't know what happened in September, because that report is yet to be released because of the shutdown. So I think a lot will determine, hopefully, they can solve this shutdown problem, get these past due economic reports out before the Fed meets again at the end of October. Because what would be bad would be these reports still locked up, the Fed panics and cuts rates too much, and then they start talking about it. Well, we may have to start raising interest rates because inflation has started to go up again. So it really is,
Uncertain
Yeah.
would be the word.
And
It's
in-
always, but this is more uncertain.
This is more uncertain.
But-
You got a lot of things going on that, we haven't seen in a long time. Yet, like we said, the market keeps going up, the cryptocurrency keeps going up, gold and silver keep going up. You take a look at all that, historically, that's not a good ending.
No. Well, historically, though, we haven't had Bitcoin that long.
Right,
But,
right,
but the gold and silver and all these things.
right.
But when have they not been gradually, even when they haven't been going gangbusters, since the 60s and all that, when has precious metals and other things like that, when have they not, at the very least, been gradually going up?
Usually in some type of crisis, they tend to really spike up.
Yeah, but when have they not?
No, they haven't. Yeah, no.
Well, that's the thing is, people do learn to live with it. Sort of. Speaking of learning to live with it, we have to learn to live with the clock, which basically says, Mike and
It's
Richard,
over.
get lost.
All right.
Ladies and gentlemen, this has been Mike Carnevale and Richard Morco. Long Hill Report, conversations for October, and we hope to see you next month.